if you look at in terms of calendar year, till 2027, we had 7 years of positive equity return from 2016 onwards. This is the first time since the introduction of Nifty, and not only from 1995, Nifty goes back to 1990. So since 1990 till 2023, only on one occasion we are seeing this 7 years of continuous positive return on equities, and that's between 2016 to 2022. So in that sense, equities have done reasonably well over the last 7 years. Now, can it give a negative return in 2023? Possible. But if you look at in October 2021, Nifty had hit the level of 18,400, and again in latter part of 2022 it had hit 18,800. So if you look at from those levels, market is still down. So from a value, see, ultimately equity market runs on only three things: fundamentals, liquidity, and valuations. So far as the fundamentals are concerned, growth obviously has slowed down, and perhaps growth will slow down further. And by growth I mean in terms of GDP growth. So far as the corporate sector is concerned, corporate top line growth is likely to slow down in line with GDP. But with the raw material cost falling, there is a clear possibility that there will be margin expansion. Now, if there is margin expansion, it's quite possible at the bottom line level, the corporates can maintain a healthy growth, maybe anything between 12-13% for the current financial year. So, in terms of fundamentals, both macro and corporate, we see slight deterioration, no significant deterioration. So far as the liquidity is concerned, so far as the foreign liquidity is concerned, we have seen very significant outflow in 2022. Net basis more than $15 billion, and at least the initial months of 2023 also there has been outflow. Going forward, as the interest rate environment globally becomes more accommodative, at least less restrictive, and liquidity condition actually becomes more accommodative, there are reasons to expect the foreign flows towards India will turn positive and remain positive. So whereas the domestic flows are concerned, domestic flows have been very resilient. From $7 billion in 2016, the mutual fund net mobilization under systematic investment plan has jumped from $7 billion to $20 billion, and that run rate is continuing even into 2023. There is not much reason to expect these flows will go down significantly in 2023. So from a perspective of liquidity also, the situation, if anything, is improving. Lastly, valuation. Obviously, corporate earnings, there has been some reversals in corporate earnings, but net basis, if you look at it, it's not that there has been any serious degrowth in corporate earnings. So given that the market has come down either from 18,400 level of October 2021 or 18,800 level of late 2022 to the current level, almost 1,000 points below that, obviously the valuation is looking much far more attractive than it was looking before. So seeing from all these three perspectives, fundamental, liquidity as well as valuation, Indian market is looking healthy. Is it possible that Indian market will give a disproportionate return in 2023? I think the probability is low. But having said that, high single digit, a low double digit kind of a return over the next 12 months is something which is very much possible.